Welcome all of you. This is the first part of final account. Today we are going to discuss what the means of final account and how the what is the form of trading account, how the trading accounts work, and it's calculate the gross loss and gross profit. This is Dr. Anil Kumar Tiwari, Faculty of Accounts and Finance from the Sage University Bhopal, going to explain you. Please uh, listen it. Now this is the first part of final account. Now, final account means the final account is the last step in accounting process. A trial balance is prepared at the end of the accounting year to know the balances of all accounts and to test the arithmetical accuracy of accounts. But the basic objective of accounting is to know about the profit and loss during the previous year and the present financial position. This can be known only if the trading account, profit and loss account, and the balance sheets are prepared at the end of financial year. These are also known as financial statement, which are prepared from the trial balance. Final account include the preparation of trading account, profit and loss account, and the balance sheet, as these two statements are prepared to give the final result of the businesses. Both of these are collectively called as a final accounts. Accounting cycle finally ends with these statements as shown in the next slide. So herein we are going to discuss how the accounting cycle works. So please listen to me. Now, first phase of the accounting cycle is what? It start from transactions. When any transactions now occurs, or now it is exist in the business, for example, selling and buying or exchange of goods and services, or which kind of transaction we are talking here? We are talking here the financial transactions where money value is involved. Where the money value is involved, it is known as the financial transaction. So after the transactions, when it would be occur, now first it is recorded in the in the general book, or it is known as original entry. It is recorded in the book of general. So when transaction occurs, it will be recorded in the way of chronological order in the general. And after recording the general, we want to classify all the recorded transactions. So we classified into the ledger. So after the preparing general, what we prepare? We prepare the ledger. And after the preparing ledger, we find out the balance of the real and personal account. After the finding their balance, now we going to check now all it is arithmetically accurate or not. For the checking the arithmetical accuracy, what we prepare? We prepare the trial balance. And after the preparing this trial balance, all it is now okay and accurate. Now we are going to prepare the final account. And this final account give us what the profit and loss of the business for the particular period or year. So this is the accounting cycle. Now types of financial statement already we'll discuss. Trading and profit and loss account and the balance sheet. It can be divided broadly into two parts. What the means of the trading account? Trading account is the prepared by the trading concern, is that concern which the purchase and sales finished goods to know the gross profit or gross loss incurred by them for buying and selling of goods during a particular period. Gross profit or gross loss is the differences between the cost of goods sold and the proceeds of their sale. If the sale proceeds exceed the cost of goods sold, the gross profit is made, otherwise the gross loss is made. Now, this is the performance of study, the performance of trading account. First, it particular amount particular on top of heading we mentions trading account, and for the year ending, at which year now we are going to prepare. Either it is prepared on the 31st March or 31st December. Basically, it's two side, debit side and credit side. Debit side, what comes? All the direct expenses, and credit side comes the revenue. So now we are going to discuss each and everything one by one. The opening stock, what the stock material you have you have in the last year, what the closing stock, and for the current year it is known as opening stock. So here you mention the balances of the closing your stock, and what the additional you purchase to conduct the selling and buying activities. So what the purchase you have purchased in this year, and in this purchase you will deduct returns, and then after the final amount you will shown in this amount column. And now the direct expenses, all the Expenses directly involved in the business known as the direct expenses carries inward wages and salary, fuel and power, coal, water and gas, octroi. Then will comes what the buy sales. In this sales, we deduct the sales return by closing stock. And when we compare this, the revenue, this is known as the revenue side or credit side is more than this debit side. What comes? The gross profit. And this profit now we would be transferred to the P&L account. If this debit side is more than the credit side, what will comes? The gross loss. And again, it would be transferred to the P&L account. So this is the format of trading account. Thank you all of you. Thank you very much for listening. In next video, we will learn how to P&L account prepare. Thank you all of you.